GM.
GM, bro.
How are you doing?
I'm doing good. The market, though, doesn't seem to be doing good.
Well, uh, it could be better, definitely. Yeah. I tried to long BTC this morning, and so far it's not going great.
Yeah, I mean, we're in a pretty typical like algo-driven downtrend. There's pretty much nothing you can do. The best thing to do is just like sit on hands.
Oh yeah.
I think the market pretty much right in is like current state is essentially bearish going into the whole Jackson Hole event. The general consensus is basically like Powell is going to defend his balls and his honor, quote unquote, when it comes to his position as chairman of Fed, right? As well as he technically, right, has the argument now, considering the biggest change right now, which is affecting risk markets, is inflation is once again entrenched in the economy, essentially because you have a job market that is not as slack as everyone thought, including myself. However, ironically, it's also not as strong. So it's not like a growing labor market. So it's not increasing like what we saw collectively between 2021 and 2022, right? And obviously during that period, we saw interest rate hikes. We also saw a massive change essentially in like PE ratios. The valuations of stocks basically got repriced lower, right? So risk in itself went down. And we're kind of looking at like kind of a similar situation, but it's not hikes. So essentially today or later today with the Jackson Hole event, we're going to see a lot of things quoted and talked about. Inflation being probably the biggest one. Forward guidance when it comes to what is the Fed going to do? Are they still going to cut in September? Obviously, probably not. I think they don't. And essentially, it's like the same iteration, I guess, the past 8 months of basically like sitting on hands until something blows up, right? And the whole like what can blow up. The what being is essentially inflation ticking up because prices are increasing, right? And this is actually the tariff effect that we're seeing now. So initially, the first few months, prices were essentially shafted onto businesses. So like the businesses were like, oh, okay, we can accept a little bit less on a profit margin and increase before increasing. So they didn't increase prices yet on products, but they are now, right? And we saw that in the July report. We'll see it probably in the August and September. So that'll be essentially the great consumer test. And this is what retailers, economists, traders, everyone's looking at pretty much. So the next like month or two is going to be how actually resilient and strong, or probably better worded as how cash strapped are consumers. Can they match these price increases, right? And the funny thing is, if they can't meet the huge price increases, right, an already somewhat squeezed profit margin is going to crack pretty quickly, right? So you're actually going to see a lot of businesses go into the negative very quickly. And obviously sales plummet, revenue plummet, right? And that's where you get into potentially the hard landing situation, right? Where the economy essentially actually slams into a brick wall like a train at full speed, right? And yeah, I mean, honestly, I don't think there's really anything the Fed can do, because if they cut rates in September with a high degree, a high chance, high probability that inflation's going to tick up again for like the next 1 to 3 months ish. Right? They potentially risk runaway inflation. Right? But also like not really, because if it's proven that in the next month consumers can't match these prices, then you basically get a recession, like guaranteed. Also, welcome, Richard.
GM, bro. Such great start, opening thoughts, just sparkling up my mind around Jackson Hole and the current situation. Yeah, very, 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 very interesting week to say the least. And I'm really curious if, Powell is speaking in like 3 hours, I guess, 2 p.m. UTC. And this algo driven stuff, you can clearly see. I mean, like each bounces are just shallower and shallower, weaker and weaker.
Yeah,
And
pretty much.
once this peak is over, it might get like unwinding these defensive positions, but we'll see. So I had like 2 trades this week, like small plays, but I'm looking forward to see if something plays out in the second half of New York, maybe.
Mm-hmm. I assume you're probably a lot more on the defensive this week, like probably
Correct.
not taking on long risks, probably more shorts.
Correct. That's right.
Nice. Yo, Dal, can you share my screen?
Yeah, sure. Here you go.
All right, so my chart's a little bit messy, but the key things here is the EMAs, right? So we have a textbook condition change, which is basically, we've gone from an uptrend in terms of systematic and algos. They tend to trade with the EMAs, right? So these tend to get respected, right? Now, this is pretty important. Obviously, after we ran the high and then failed to actually accept higher and then traded quite a lot lower. And that was also in line with higher inflation. So the market pretty much saw, since the market's usually, forward looking. So their forward guidance expectation is risk essentially going lower. Probably a rebound in the dollar. There's a lot of debate about demand for treasuries because of the whole like dividend interest play. At the same time, there's this not really great interest actually holding on like that duration risk when it comes to bonds. So we'll look at gold in a minute as well and see how gold's trading. Gold should probably be higher. But yeah, so key condition change. Essentially, the market is now trending low, obviously, and this condition is set as well with the rejection of EMAs. So specifically the 4-hour and the 1 day, right? And when this happens, you typically get more of a long term, as in probably like a few weeks to a month of downtrend. And obviously, depending on market conditions, so the market environment itself, if it's like truly risk off, especially from today, we'll probably get extended risk off conditions in equities and crypto. I can go back to previous time that we saw this, which was basically a compression, where we saw consistent loss of trend here, right? And then the market also plunged quite a bit after that. So we'll basically draw it from around the EMAs. It's like a 20% or so down move. That would probably be like the leg lower. Obviously, from current price, it doesn't look good. To like include, potentially we get like a bounce as hedges close, and then if we get, I don't know, like the same, we see like 91k, which would be crazy. I don't think we should get that low in a bull market, to be honest. Like realistically, we just see a sweep of like 5%. And then obviously get a strong reaction back. If we see that, that would be a very bullish sign, I think, for the market. That would make me more risk on, actually. And it would look something like, how prices, bleeding lower, right? We just get like quite a volatile sweep lower, but it is essentially rebound quite quick, and then you consolidate something like that, or even something like, you know, like legs lower, and then we kind of base around a bit, and then move back up. It could even look like that. Something like that would be a good outcome, in my opinion. We don't exactly want to see a dramatic plunge where we, you know, lose structure, especially around these highs and the consolidation before the move up. I don't think we want to lose that, which is about 110. As well as, you know, to lose like 100k or about 101, especially with like these kilos. I think that would be the point, you know, of losing this, where we look at significant market structure shift. That's when I'd be looking at, you know, potentially local top, at least on higher time frame. Yeah, I don't think we're there yet, but definitely worth watching. As well as it lines up quite conveniently with the SPX as well. So very similar, you know, systematic uptrend, like we see, you know, with like these lows being respected each time. As well as, you know, this is kind of an individual event. And now we see compression in the same systematic area. So this is pretty key. We have Jackson Hole as well today. So we wouldn't want to see the loss of the 1 day on the 4 hour EMAs here, or like monthly open. But like that being said, if we see kind of like a V structured dip per se, especially around like 6,200, that could be like the max pain dip to buy. You know, but there's a ton of fear, quite a lot of volatility, and it kind of like peaks off there. As well as we, you know, see a spike in VIX and the dollar. That's one scenario in a significant sell-off that we got that I'm looking at. But ideally, we don't see that significant of a sell-off. We don't really want to see that. And then I assume for NASDAQ, we're probably already seeing some crunch. Yeah, by the looks of it. It's still pretty risk off though. Like on NASDAQ, we've already lost it similar to here. And we've had multiple bars close below. That usually means the market's pricing lower. Yeah, we can see since July the dollar is making higher lows. And then that's right. This move was employment data, or I forgot. It was economic data, which basically was not great for the anti-cutting thesis, essentially. But then now, obviously, it's kind of like opposite to that. So there's kind of a valuation gap, I think, between like current price and about 99. So I would say key thing here with the dollar really is around 100 or the DXY. Above that would be extremely risk off for the markets. Below that, you're likely to see more capital go towards buying risk assets in considerable dips, like, you know, like 5% or so, or even like 2 to 5% typically is about the standard for indexes. We have gold as well. Turn this off. Gold as well. Probably down because of dollar strength. But other than that, like high time frame, it looks like structure wise, it looks like an upwards consolidation. Which obviously makes sense when it comes to pricing in higher inflation, or quote unquote higher inflation. Right, and then we'll go to this. Okay, so it's his speech at 10 a.m. That's right after market open. Jackson Hole is tonight. My guess is we probably see like the expected kind of hedging, and then also a lot of like predatory firms trying to hunt everyone for liquidity this morning. That's probably going to end up being kind of a shit show tonight, since it's the symposium as well as like markets are closed. You could see some like pretty goofy, I would say goofy price action, especially when it comes to Bitcoin. Every time we've had some kind of economic event or something political, especially when markets are closed, all the firms essentially go towards Bitcoin. Since it's obviously open, like 24/7. And nowadays, since it's a mature market, I would say there's decent liquidity. So even on weekends, even though spreads are wider, they can do some interesting shit.
Yeah, indeed. I mean, looking at how it's trading currently, and I think it was unable to take the 112 like bid liquidity. I think it's gonna get taken soon, but I don't expect this to hold, to be honest, because it's like building value as it's like slowly bleeding down. So I even expect like a deeper flush to this 110 and maybe 112 pocket somewhere. We'll see how how aggressive the market opens is going to be.
Yeah, I expect as well. There was a post that I saw the other day, which was pretty important actually, in terms of like valuation. Yeah, so like basically that polo, the current one, right, which is essentially meant to get tested, right, as well as like what I noticed instantly here. Typically, when you have migrating POCs lower, that essentially means the market is agreeing on a lower value, which, yeah, pretty obvious when you look at Bitcoin's chart. Just continues to grind lower and lower. Right, it's like, here you could consider this like POC 1, POC 2, and it just continues to migrate lower with lower highs and lower lows. And this is a very contextual low here. So we've like briefly bounced from it, but we're testing it again. This is pretty key because typically positions like to build up a ton here. So, obviously below, we're going to see like a pretty volatile plunge, probably. As well as, back above probably like 13.5, maybe a little bit higher, like 14, okay, call it. You could see quite a dramatic squeeze as well with hedges. That's like very, very important, I would say. But back to the economic data, something I wanted to point out as well that I haven't really seen people talk about, but we essentially have like existing home sales like declining, I believe, over time. Yeah, like it just continues to basically stagnate. Like it hasn't moved much since tariffs as well as like yields started impacting the underlying economy, which is basically what I mean is the cost to borrow is actually increasing to financially literate people. That's kind of like a no-brainer, but to the average consumer in person, when you look at it, like basically the housing market looks quite weak. By weak, I mean you're likely to see more supply come into the market as well, especially as financial conditions worsen for consumers, especially with like higher inflation, higher prices, right? And we can open up US I think I have the mortgage rate somewhere. That's week only. Yeah, so the 30-year mortgage rate, basically the standard rate. This has remained like sticky. Basically, like it really has not moved since December, right? And then obviously the situation we're in, you'd expect yields as well to go up, right? With inflation, that typically happens, which would mean you could see a lot more mortgage paying, which would then essentially force that supply to come onto the market. And that'll be something that the Fed's going to have to look at as well, because if you get sudden weakness in the housing market as well as labor market as well as businesses at the same time, aka recession, right? They will be forced to do panic cuts probably. And like all hell will break loose in terms of that. I think it'll be really super interesting to trade like an actual recession, not something like 2008 at all, but more like dramatic cooling of the economy and various other areas of the economy. It'll be super interesting to trade since crypto exists, right? As well as like a mature sector too. So it's going to be like super chaotic. I've seen like a lot of chatter as well about something to do with FX volatility increasing with like lack of liquidity or something like that. If that's true, we should see like VIX moving up. But I mean, VIX is like only 16, about the average. So nothing really being priced right now. Back to this. Previous week.
I think it was the PPI, right? Which kind of was unexpectedly hot. Which day was it?
Yes. Yeah, so this was a start essentially. The core inflation year on year, which was above 3%. I think I've echoed this like many times over the past year, but around 3% or higher is like the red flag pretty much, because that essentially means you get opposite of what the Fed wants. So the Fed wants 2% inflation, or a little bit under, like 1.5 to 2% ish, but like you have underlying growth. It's kind of what I would call honestly like economic bullshit, because to get growth you need like running inflation, but you need to control the inflation, and the Fed can't control it, evident of like the past few years, right? So now we have potentially running inflation again with supposed growth questionable. So the market's like, okay, probably time to get out of risk, or at least take a lot of profits off the table. That explains the past 10 days or so of well, the past 2 weeks of the markets, of financial markets, risk, equities, bonds, etc. How everything's trading, right? Yeah, and yeah, PPI gapped up a lot. That's a whole 1%. So that would actually be probably TARF related. Actually, we can, I think, go into that. Yeah, does it show me the full PPI? there was like a steady increase since May on most things. I remember looking at this as well on the day. Like the thing to look at is basically the 12-month adjusted change. There were some significant increases, which basically tells you prices are rebounding, especially from producers. And the producers having to raise the prices, which are being paid as well, is directly tariff related. So to go back to like what I started, the whole like 26-minute rant of we're gonna see pretty soon, you know, how strong or how healthy consumers actually are, and if they're not, then I would say, you know, the recession trade's gonna be pretty chaotic, and there'll be more than likely unpriced volatility that's going to quickly come into markets. That's going to be pretty interesting, to be honest. And you know what I was looking at literally before the stream is ETH actually is somehow not trading like absolute shit compared to BTC.
So funny.
Which is crazy.
Yeah, I was gonna.
I mean, I will say this low here, around 4K. You lose that, it's yeah. I mean, basically risk off.
What about the upside?
I mean, the upside would be dependent on Powell, unironically. So Powell markets by the balls at the moment. If he says some dovish stuff, markets can ascend again. But if he's like hawkish and then defends like the whole Fed guidance part, I don't think markets are likely to trade very risk on for a while until maybe like end of September, as well as like the seasonality of Bitcoin. September typically is risk off.
No, I mean that's fair enough. And if you can have a look at real quick the ETF flows, very telling.
Oh yeah,
from ETH side and BTC side, you know, like back-to-back outflows this week compared to previous weeks, you know, aping literally. So it's just yeah, very telling. And due to the seasonality as well, I think maybe Jackson Hole too. I think Fed blackout too maybe could be like indications here.
Oh, Fed blackout too. That with the current conditions, you probably would see higher volatility. I mean, volatility really hasn't been priced in like at all. I mean, everything's been very, what I would say, organized. You can see it in Bitcoin's chart. You can see it in equities. It's that algorithmic like sell-off as positions are basically rolled over, closed, profits taken, and then the market essentially just awaits its sentencing, I guess you can say. But also, you reminded me, this is a pretty important one. A lot of the like massive strategy investors went quite risk off when it came to MicroStrategy as well as Bitcoin around the initial top. And then there was like a pretty interesting divergence actually that we've seen play out for, which is basically MicroStrategy is lower. And then you see like a respective pop into the high, which was faded by the market and sold into, right? Unsustainable. And now the market is actually pretty much trading along terms of MicroStrategy and ETF lows, like what you were saying, basically. And I'll go to that.
Oh yeah, there it is.
So these are from like previous days, right? So it's 127 million negative, 220, 68. I mean, these are probably like from the low that was bought in early August. Wait, 8th was that? Is that the high? Oh no, that was on the move back up. So they probably broke even.
Yeah, sort of. Yeah, I mean, there was these rumor, and not just rumors, because I think these were outright facts that these copycat treasury companies were like bidding, into, like, we even took the highs, and then probably some
Yeah.
profit taking right now, obviously.
Yeah. I also know like there actually is a lot of profit taking from more of the smart and tuned investors or firms that use like IBIT, and they'll see like incoming flows, large inflows, especially from the greater Bitcoin market, and then they will essentially issue to sell off a block trade of IBIT, which usually comes in like I think like lunchtime, early afternoon, or something like that on IBIT, and that's usually where you get like those local highs during like US sessions. Oh wow, it's a large sale on ETH. I know it's a large one earlier.
Yeah, and I'm also trying.
Yeah,
to
a lot
see...
of money's been poured into ETH,
Yeah,
like a lot around there. That's probably why ETH is up a lot, or has kind of remained quote unquote strong, is because of that TradFi bid. Yeah, like they were actually buying the high. Actually looking at chart, I think like this looks pretty clean to me. Wait,
So long ETH, short BTC. That's the idea.
If we get a bullish reaction from the market and Powell doesn't nuke markets today, yeah, probably. I mean, like short the BTC bounce, but like long the ETH one. I mean, it's just basically the range that we're in right now, based on the ETH is. I mean, it looks like multiple rejections to get above 4.3K. But I think if we retested 4K again, it would not hold. You know what time it is now? It's time to have a look at Arkham's dashboard. So there is a 2 week, yeah. All right, so interesting. Layer 2s and DeFi have remained. I mean, they were up a lot. Like DeFi, yeah, it was up. I think as high as like some things were up a lot. Like Lido doubled during the move up that we had in August. Like that's a huge move off the low. Yeah, 91%. It's massive. Wait, actually, I'll go to Velo. Yeah, Michael.
Yeah.
Do you use Velo?
I used to. I tried it a few times, but it's not like my daily go. I'm not that smart, but I heard it's pretty good.
All right, for you, what I would recommend for using Velo is pretty much the markets page.
Okay.
Like you can get some pretty good information on the futures, but I think you would like market more because you can see things more on a granular level, like the return bucket. So this, based off the 1 week, essentially tells you most of the market is down about 5% on average. Some things would be down like a lot. So like in a bull market, that would essentially mean this is like the dip to buy, right? But questionable given picture of backer right now. But the very cool thing that I really like is this, the sector performance, because you can see tickers very cleanly, right? And the sector. So yeah, based on like 2 weeks, right, we can see L2s have remained like fairly strong. But based on this bucket, they're like testing the same lows. So then we can go to one of the tickers. We'll go to like Skew. Yeah, and we can see like from this level pretty much.
So once again, if you could get back to the Velo for a second, what's the buy the dip indication for you?
Usually when you see you see the return buckets on the left.
Yeah.
Right. Based on the 1 week time frame, when you get a dip of like most of the market being like about 5% or 10% down, that usually means it's like a buy the dip opportunity. If it's just a pullback, right?
Okay.
That's also when like equities remains pretty strong. It's like right now I wouldn't obviously just long the dip kind of thing. Yeah, I would basically see what the Fed's gonna do, because that's gonna send ripples through the market. Yeah, so I mean, if Fed is not as hawkish or bearish as I expect them to be, then you're likely going to see a lot of this migration around the 5%, probably go back to like 0 or maybe 1 or 2% up.
Okay, thank
Makes
you.
sense?
Yeah, thank you.
Nice. Also, like it has the funding as well for like large caps. You can go through mid cap, small cap as well.
We have the funding grade comparison on Wi-Fi Pro too.
Yeah, I heard about that.
Yeah, I mean, finding the outliers is probably one of the best resource, I guess.
Yo, wait, is this one of are these like DWF coins? Top gainer, meaning it's up, but the fucking funding rate is like massively negative. Yeah, probably is DWF coin.
Doing a quick search.
Yeah, let me know if you find DWF on it. Actually, Jesus, it's up 272%.
Yeah, I've seen Arthur
What is
Hayes
this?
buying it. No idea, but I've seen his wallet buying it.
I mean, he usually just dumps on retail anyway, so. Lovely. But as I was saying before, I should go back to this. So this was one of the L2s that I was talking about before. And we can see key level, right? Respected resistance before, respected support, now breaking it. This is good, like a respective perspective on the L2s next. So essentially, if you were like already short from like here, turn off that shit, like here, right? You would want to see a continuation lower, essentially taking out these lows and targeting this low here. As well as like the sell momentum probably will be triggered by the Fed speech, so Powell, and the symposium later potentially. So in other words, everything is lining up very, very nice for sells today, like honestly. And I would say from a psychological and market standpoint, combining the two, if we don't really see sells pushing aggressively and making progress today with a lot of potential bearish arguments, and they actually don't really get anywhere, then we're potentially looking at a huge bear trap in markets. That is one outcome which I haven't really seen people talking about or even looking at. You know what? I think it's time. Okay, this is a high time frame chart, I believe. Yeah, this week close is going to be super important. Because if we close back above 114k, that would be not as bad. Closing below 114k, would likely mean we trade around like 104. Potentially as low as like 100k. Like this would basically be the pocket to then get long again, in my opinion, for higher. But breaking below that and then trading around here, I think would take the market a while to recover. And it also kind of validates like this higher low.
Yeah, the round numbers, and also as you can see clearly on the 1 week chart, like 120 is like for some reason BTC was not able to close above 120, right? So that's very telling. And I think 110, that's why I'm looking at this 110, 112 bucket as well, because it should provide like some sort of initial reaction or bounce, right?
Definitely did. We can usually have a look, see how the market traded. Yeah, I mean, above like 120 was offered quite a lot. We saw considerable stacking. It's like, a lot of supply was sold here. Selling started here as well, and then it was quoted. And then they kept selling into each bounce. And on the way up, you can see they was basically just laddering sell orders the entire time. And then obviously the loss of momentum. Like whoever was trying to sell here didn't even get filled. And typically when that happens and you get like kind of a waterfall moment in markets, they just mark it into the book, which probably was this candle here.
Yep.
Yeah. And in terms of like how the market's been quoting 117.5, that was like really key low to hold, which the market struggled to hold in and broke here. Like around this sell-off, that's when the market became very risk-off, as you can see with constant, again, like with the high, right? Except price going lower and market chasing to sell every single bounce. And we're still seeing it even here today. But we do see increasing bid depth a lot, yeah. Yeah, like a lot of bids are getting quoted. Typically means the market expects a push down. Yeah, 110, like basically between 112 and 110. About 117 million in bid depth, I think aggregate was, which isn't a lot. But also a lot of the orders tend to be passive. Maximize this. Whoa. I did not want to do that. Yeah, it's pretty algorithmic. Like OI increasing on the way down. That's an algo basically opening shorts, and then they close it on bounces, and then they just repeat the same on the way down. That's actually why you see the CVD. That's basically a lot of value with price as well.
Yeah, and these type of this impulse down, like a shallow bounce, low grind up, and then again once it's getting triggered.
Yeah, I mean this move right here from 117 to 114. That was actually long licks mostly. Like a lot of long positioning got wiped out there. Yeah, and then like the bulk of the long positioning getting wrecked from like 120 down basically. Yeah, this is a pretty short market, I would say. Not a lot compared to last time though. It's only like a 2k, maybe 3k OI change in terms of BTC. Like other times when the market was like stupidly risk off, as in like actually bear trap, it was like 5 to 10k BTC being like basically net short. So we can see this area constantly has been bid by the perp market, and each time we see a bounce, we also see shorts closing as well from each bounce. Obviously, though, each bounce has gotten weaker, so yeah, 112 to I would say about 112k is like super important for today. If we see like a lot of shorting and like selling into 112. I'd want to see how the market trades below that, because if it struggles to actually accept below that, and you see a lot of attempts to drive the market lower, then that would be a pretty good long scalp for me personally.
Yeah, I'm also looking at it at that. Yeah, sure. Because the current bid liquidity is quoted at 112, so underneath, yeah, it's like a different thing how it trades.
Wow, dude, look at ETH. Its order book is stacked.
Although maybe it could not switch if you're looking at ETH. Oh no, it's working.
Yeah, I forgot about that. Yeah, but look at this. Like the market's remain really, really stacked. It's kind of rare that you see ETH liquidity better than BTC's liquidity. Yeah, I mean, pretty clear loss of momentum at the high. Like the supply isn't really that thick, honestly. Just lack of momentum. Now the market's been trading, but like each dip is getting bought up a lot, like a lot.
Yeah, I mean,
it
look
looks
at bid
good.
depth around 4K. It's
Yeah,
a level
yeah,
getting defended heavily. Yeah.
Yeah. It's also a psychological price, the whole round number like thing, right? That being said, as well, when you have as well like perps defending the heck out of it, as well as like 4K and like the whole round number theory, breaking that would be really, really, really bad for the market. I think it's like alts would shit the bed, to be quite frank. I do not. I don't want to see 4K lost, especially on like high time frame. That would be very strong risk off signal for alts. Right now, like it doesn't look too bad though. I mean, yeah, I will say like again, 4.3K important. I think that'll probably be my trigger for chasing on a long if we break above 4.3K again, because ETH would probably run to like 4.6. So
What was it
that'd be a
that?
pretty easy move.
Yeah. Well, I think 4.3 or or 4.4 was the 2021 highs, I believe, if I'm not mistaken. That's probably why market is
Uh,
like quoting it that way.
yeah, maybe let's have a look. Oops. 4.6.
The 2021. That's 2022. The one in 2021. That
Oh,
one. Yeah.
the main high.
Yeah.
Yeah, this week, yeah, it was 4.3.
Yeah. Okay. So that's why it has relevance as well. I usually look at these highs.
Yeah, I mean, one nice indication here, like you have this, right, as well as the breakdown from the same level,
Yep.
and constantly rejecting it on our high time frame. We're trading above it still. So, like seeing that dip into 4K and it being bought and a strong reaction, that'd be super bullish for ETH. Obviously, losing 4K and 3.9, that would look really bad. I mean, we would, this low, I don't think would hold. We would have to trade somewhere back around here. Damn. Actually, very big month for ETH. Bigger month for ETH than BTC. I also don't really want ETH to get cucked by a big one. But, correlation.
Yeah, and for ETH, I still believe we might have like a false breakout when we sweep the all-time high first, and then build a foundation and go for it again.
I think we should have had that already. So it
Yeah.
leads me to believe that we got front round, essentially. It feels like really, really key area here. Like massively key area. I mean, this has been the deciding factor for basically all seasons each time. And like currently, ETH is consolidating. So, I mean, ETH consolidating here for like a little bit would actually be pretty nice. Because if we consolidate here, somehow get some like really nice bullish narratives lining up into the end of year, then we get that huge pop from ETH. And then probably pop around that, I would say. I'm going to keep that. It kind of looks good. I've seen a lot of Soul hate as well.
It's not looking that bad, actually, after such a long time, right?
I mean, it's not trading as good as a lot of other alts, and we're rejecting like 200, which is previous resistance. So best case scenario, we basically consolidate, somewhere between, I would say, like 140 here and probably here. Until it's like something big happens narrative wise for Sol, for it to break 200k and run again.
Yeah, very interesting. Many alts are much stronger since daily open compared to BTC.
Yeah, true. Hype as well, maybe high or low. Hard to tell. It doesn't look great, to be honest. Because we didn't make a high. We kind of swapped out and rejected it. So
I closed a long this morning. Basically, I thought it's higher low and it would start bouncing, but the market is weak. I secured
Yeah.
a bit of profit. Uh, yeah, I have a strategy that I'm trying to implement. So basically, on each liquidation cascade, I want to be long hype because the buyback pressure is quite significant. And
Makes
I
sense.
usually bounces pretty well from what I observed. On my chart, I marked a level on hype, which is, wait a second, I need to check. The chart is loading. 1 second. I think it was 42.5. That if we reclimb that, then I'm bullish. Yeah,
Yeah.
42,
Yeah.
50,
That makes sense.
60. That's when I'm going to be bullish. And currently, uh, yeah, if we if
Yeah,
we
I think that
if
makes
we
sense.
if we break below daily open or like weekly open, I think or monthly open. Sorry, I'm
Yeah,
like
monthly.
I have high conviction in 67 Pacarius per hype.
Yeah, fair enough. One thing here that stands out with the monthly open is once we lost it, we sold off, right? Once we basically fought for it, price went up. Well, more so same as like the rest of the market, right? Kind of swapped it here, closed below it, closed back above it here. That's kind of good. However, most important part is we need to break this structure of lower highs. So that would mean essentially closing back above and consolidating above 42 and grinding back above like 44. Once you get that, then you could see a strong hype. I do think that's going to require the market to be pretty strong, though. How about our favorite shitcoin, Filecoin? Does not look good. They were like rejecting Ely up and down. Previous support's not really holding at the moment. So if we get like a massive dip on Filecoin, like if we get like 59 or 60 cents, I reckon that's probably a bid. Yeah, like look at this, Michael. So we front ran the low, initial low, front ran. Tried to hold the same level, losing it at the moment. Probably sell off and sweep it, then reclaim. That'd be super nice. Oh, whiff. Failed at the high. Change in trend. Buy the dip. There's still some pretty good setups, actually. I mean, the dips are going to be quite large. They're like minus 31% on whiff.
So you say short whiff? Let me
I mean,
open.
it's trading into kind of current support. So no, but like losing 8 cents, I guess. Not good. I mean, I'd buy like 6 since that looks like a nice area. Or even if it's like just above that, like 7 cents but strong, that'd be a nice high low. Ave as well. Ave was one of the favorites. It's still struggling around like 300.
Last time you said to me long, I did long, and I forgot about that position and was liquidated over the weekend.
Oh shit!
Because I opened
What
it
was
from like
that?
I was liquidated at 282.5, something like that. No, no, it
Oh,
was
it was.
no. So we were long, like yeah, here we went long, and I forgot that I opened that position because it was on another DEX that I don't use on daily basis. And a few days later, I opened and I was like, "Damn, I forgot." Yeah, it was funny.
Shit, my bad.
No, it's good, bro. It was just me. You said where you would cut the position. It was just me not paying attention to to what I do with my positions.
Yeah, don't try this at home, guys.
Well,
To be honest, like I don't know why it happens to me more frequently recently. Like I forgot I opened a position and yeah.
maybe you need like a position management tool which you can connect like all your dexes to.
Yeah, maybe I have a solution for that, but we're still working on it.
Yeah,
Soon.
for sure. It is 8 a.m. There should be a little bit of. This will be delayed. Yeah, it's gonna be such an interesting day. It's the same as like BTC and systematic downtrend. Brr, low. Someone seems to like this level though.
Maybe BNB also worth a glance.
I haven't looked at BNB. BNB is a funny coin. It does really well usually during like bear markets.
Obviously, we know how it's controlled, but I mean,
Nah. I mean, yeah.
yeah.
Yeah, I mean, it basically played out, I guess, whenever the last stream was. We got that dip and then it went up higher, but pretty meh move, to be honest. Yeah, I mean, pretty clear. Like, where I'd risk off is probably closing back below like 740. Till then, let it consolidate. Obvious red flags being like lower highs and then lower lows. Otherwise, not bad. Damn, the market's so quiet.
Yeah, it's still like 2 hours till the speech, so it's just
There's still hedges going pretty high into 112. It's really, really quiet around 112, 110. So sometimes we can get some clues from the Euro USD market. Euro's down, but somewhat of a bid this morning. Kind of weird. Yeah, big day. Otherwise, I reckon we can probably wrap it up here. Michael,
Yeah.
since
What's
you're my delightful host, I reckon let's wrap it up.
Okay.
There won't be like much really that's going to happen between now and like 10 a.m. EST.
Yeah, I agree.
Like
Probably
another like
after.
hour will just be like boring.
All right,
two.
guys. Actually, if wrapping up sooner is even better for me. I'm going fishing today, so need to prepare my
Oh
stuff.
yeah. Nice. You should tweet your catches later.
Yeah, I mean, if there will be any. Uh, so yeah, I will spend the weekend drinking homemade booze and fishing.
Oh, nice.
Yeah, sounds like a dream.
Be careful.
Yeah.
Yeah.
Please
Yeah, try
All
not to
right,
like
guys.
actually like I don't know fall overboard while drunk. That would be pretty disastrous.
Pardon me?
Try not to fall overboard while drunk, unless you're trying to say I lost my ledger on a boat accident.
Well, we'll see. Like, there's a theory that we don't like the new prime minister in Poland, and when he's not asleep, you can't catch any fish because he's manipulating them, so they swim away
Oh
from
yeah.
you. Yeah, like
No way.
it's like very famous joke now. Like, Tusk isn't sleeping and fish aren't biting. Yeah,
Yeah, that is funny.
That's
yeah,
hilarious.
yeah. All right, guys. Thank you for today, and talk to you next week.
It's been a pleasure.
Yeah, I gotcha.